Hey guys, welcome back. So I had another idea, something I wanted to do for the YouTube channel. So I went ahead and created a additional Robinhood portfolio to do this one. And this is going to be more for the people who are just getting started and are curious about fractional investing and what it does long term, and just anybody that's curious about it overall. And so what I did is I went ahead and I put $100 in here and I bought 60 different stocks. On the majority of them, I put just only $1 each. And then on 4 of them, I bought $10 worth. So what we're going to do is collect the dividends and then reinvest the dividends into either the same stock or other stocks. I haven't turned DRIP on for this account yet. If you don't know what DRIP is, it's Dividend Reinvestment Plan. And what it'll do is it takes the dividend and reinvests it into the stock that paid the dividend. So the stocks I picked, the majority of them are in the Dividend Kings list, which I believe there's 53 or 54 stocks in the Dividend Kings list. So we bought all of those with the exception of one, I believe. And then if I scroll down here, we also bought Nvidia for $10 and Microsoft for $10, Melly for $10, and Palantir for $10. And so I'm gonna go ahead. Actually, it looks like we bought $14 worth of Nvidia. Sorry about that, guys. And 10 of Palantir, and 10 of Melly, and 10 of Microsoft. The rest all have $1. And the Dividend Kings list, the way to get on that list is you have to increase dividends for 50 years consecutively. It's not like you just pay dividends for 50 years. You have to consecutively increase them every year. So a lot of people who do dividend investing due to the compounding power of dividends. When you buy one share and it pays, say, like 50 cents, and then next year you do nothing else after getting 4 payments, you get one every quarter for 50 cents. But then next year, they decided that it's time to increase the dividend because the stock price also went up a little bit, maybe, or maybe it didn't. But they want to increase it because maybe they're targeting getting on the Dividend Kings list. And now, instead of paying 50 cents every quarter for that one share, it could pay anywhere from 51 cents to 60 cents. You don't know how much they're going to raise it. So, but just like they can raise a dividend, companies can also reduce or remove dividends. But when they're on the Dividend Kings list, it's like the last thing they want to do because they spent 50 years getting on that list. So they're going to continue to raise it every year, even if it means only raising it a penny. But we can realize the compounding power of investing in these dividend stocks by buying them. Even though we're buying fractional shares, each one of these is going to pay a dividend, and it's still going to give us something. Now, most likely, a lot of them are just going to give us a penny. But here's the thing. We're going to continue to invest in these fractionally, but sometimes what we will do is, let's say a stock like here we have Northwest Natural is $46.97. We might just go ahead and buy one full share 1 week because we want to invest $50 or $100. It just depends what we invest. But we can take that money and deploy it amongst all of them, or we can buy a full share, and then we're getting a full dividend payment for that one share. But as you can see, on day one of doing this, at its peak at 8:15 a.m., we were actually up 45 cents, 0.45%. And the majority of these stocks, with the exception of 4 of them, we only own $1 worth. And some of these stocks are rather expensive. So this one here, $944, Emerson, $148, Procter & Gamble, $144, Johnson & Johnson, $219. Let's see, Nordison, $271. Let's see who's got the most expensive one here. Let's see. Trying to find it. Here we go. Granger, $1,063. And we have $1 worth. And that gave us 0.000942. So let's keep going here, see if there's anything more expensive than Granger. I don't know that there is. I think Melly might have it beat, to be honest. Yeah, Melly is $2,090 for one share. But the point of this video series, in which we'll do a daily update with you guys Monday through Friday on trading days, is that even small fractional beginnings can lead to greatness. Like, you shouldn't let something like not having a lot of money stop you from beginning your investment journey. So even if you have $5, you can open a Robinhood account and start investing in fractional shares. And what I'll do later on is we'll do some videos on how to buy fractional shares on Robinhood. We'll do a video on how to make a deposit. We'll do a video on how to make a sale. Now, I know that there's some people already out there doing this, and there's two opinions about fractional investing. Some people don't like it, but some people do. But yet the same people that don't like it are the same people buying Bitcoin at $100,000 and only getting 0.000001 of a fractional Bitcoin. So one thing you want to keep in mind is, as these stocks grow, your small ownership is going to grow with it, but you're also collecting those dividends. And if you think of a penny like this, if you picked up a penny every day and you doubled it each day thereafter, if you did the math on how much money you would have, it's a lot. So what we're trying to do is make our money compound for us. So we're going to buy a lot of different dividend stocks. We're going to add money to all these different positions throughout the time. Some of them are going to sit at $1. Some of them are going to go to 100, 500. We're just going to pick and choose which ones we want to increase. And then we want to capture those dividends so we can compound our money. But the point of the videos is going to be to kind of see how the growth goes. But I'm not going to go crazy and be like, okay, I'm going to buy $5,000 of this one, because that's unrealistic for the average beginner investor, especially if they're looking at fractional investing. So this is something for people who are like, hey, I don't make a lot of money. Investing isn't for me. I want to show you that even if you don't have a lot of money, you can still get started and then get to a point to where your money is working for you and you start to make more. Especially later down the road when it's time to retire, you're going to look back and think, man, 20, 30 years ago, whatever it is, I'm sure glad I started my investment journey, because it also creates financial stability and responsibility. You'll start to be more responsible with your money, because when you buy something, you'll think, if I buy this, what impact is it going to have on me? Could I take this money and invest it? How much money would I make off this money if I put it to work for me? So the goal is to treat your money like an employee, not a disposable asset, where you get paid and then you consume other people's products, because the rich take their money and they put it to work for them after paying all their bills and everything they need to pay. They have done this for generations. So that is why there is a thing called generational wealth, where people are born into it. And that family has set up trust, and that trust continues to reinvest the money, and it deploys the capital to future generations. So even if you don't think you'll ever make a big enough impact to make enough money, if you invested for 20 years and then your kids inherit it from you and then they continued the process, that is how generational wealth can sometimes be created. But if you go onto a dividend calculator, humble small beginnings can turn into millions of dollars through dedication, and never stop believing that you can actually achieve your goal. So what I want you to do is, if you're just getting started and you're like, I can only start with $20, I want you to set a goal to where you're going to start with $20, but in your next paycheck, you're going to try and invest another $20 and try to get to that first 100, that first 500, first 1,000, and it's going to start to grow exponentially over time if you continue to do this. The more you invest, the faster your money will work for you and start to compound. You could still lose money in dividend-paying stocks because the market goes through shifts. But some of these companies that have been around for over 100 years, I'll give you an example of a great company that I don't think is going anywhere. Coca-Cola stock. You can invest in Coca-Cola stock and have the confidence in knowing that they went through the Great Depression, they went through the dot-com era crash, they went through the COVID crash. Like they've gone through just like all these different crashes, and they've always come out on top, and they still pay dividends. So you're going to see your money fluctuate. That is not a time to panic and sell. That is a time to pick up more shares so that when it comes back, and normally it does come back, you're going to actually make more money. So anyways, this is probably a lot longer video than a lot of you wanted. But if you're new to investing and you're a beginner, I'll post a link down in the description where you can sign up for a Robinhood account or a Schwab account, which Schwab does fractional investing too. It's just a little bit more advanced on how to create the investments. And one thing about Robinhood is you can set it up to where it's automated to where it'll invest only $1 a day if you tell it to. And every single day it'll do that. But if you haven't done so, please subscribe. Comment below if you have any questions. Like the video. And for our other watchers, don't worry. We're still doing the options challenge. And that's going to continue to happen. Until next time, we'll see you guys in the next video. Safe investing and happy hunting.